How's it going, everyone? Today, we're going to take a look into what Ethereum is and why it has the potential to be such a big disruptor in the financial industry coming here in the near future. Ethereum is my largest holding in the crypto portfolio, and it's one of the projects that I'm most excited for both in the short and long term. So with that being said, we'll head over to the Binance Academy where we'll learn a little bit more about what Ethereum is and the plans for its future. After that, we'll go to CoinMarketCap where we'll take a look at some token metrics. And finally, we'll wrap the video up by taking a look at the actual Ethereum Dapps pages and some of the Dapps available. Binance Academy is one of my favorite tools when it comes to learning more about new tokens, and they've also got a lot of great information just on crypto and trading in general. And their article on Ethereum is no exception to that. It's very well laid out. It's one of my favorite resources to send new people to when they ask about Ethereum. It is kind of a long article. You can see here it's got an estimated read time of 40 minutes. So what I've done is I've gone through and just highlighted some of the key points of it, and we'll just give a brief overview of the article itself. But I do encourage everyone to check this out, and there will be a link in the description where you can find this article and read it for yourself. So what actually is Ethereum? Ethereum is a decentralized computing platform, or basically like a network of a bunch of connected computers. It allows people to transfer digital money. You can deploy and create your own codes in the form of applications. And in theory, these applications can't be shut down or censored because it's all run on this decentralized network. The currency that powers Ethereum is known as Ether or ETH, and it's currently the number 2 by market cap coin. The reason that it's the number 2 market cap coin and why it's so valuable is that anyone, anywhere can launch these applications and they can't be taken down. Ether itself stores values, and these applications can set conditions on how the value is transferred. The programs that make up the applications on the Ethereum network are known as smart contracts. Smart contracts are something that I think is going to completely change the world up in the next 10 years. We'll go a little bit more into what smart contracts are here in a second. But real quickly, Ethereum, the blockchain that it's built on is similar to Bitcoin in that it stores data, but it stores different types of data and it stores it in a different fashion than Bitcoin. Now, Bitcoin is referred to as a first generation blockchain. It was intentionally kept inflexible to prioritize security. That means it's really hard to make changes to the actual network itself. The second generation of blockchains is capable of doing a lot more things. On top of just general financial transactions, it's a lot more programmable. This allows people to experiment with their own codes and create decentralized applications. Now, these dApps are what smart contracts are run off of. And I didn't have it highlighted here, but Ethereum was the very first of these second generation of blockchains, and it's the biggest one to date. Now, essentially, how Ethereum works is Ethereum is a state machine. Certain actions will cause the state to be updated, meaning that all the nodes update their own snapshot to reflect the basic change of the state. The smart contracts that run on Ethereum are triggered by transactions. When a transaction occurs, every node on the network runs the contract and records the output of the contract that it runs. It does this using the Ethereum Virtual Machine or EVM. Now, smart contracts are just code, but they're not smart and they're not really a traditional contract. We call them smart because they execute under specific conditions, and we call them contracts because they enforce agreement between parties. But it's such an open-ended idea that a smart contract can really be anything. A smart contract could be as simple of, if the Lions lose the next football game, I have to pay $10. Or something super advanced, if I don't pay my rent within 1 week of the first of the month, my access code to the smart door lock on my apartment doesn't get enabled, so therefore you're restricted access. These smart contracts can be really anything, and that's one of the reasons why Ethereum has some crazy potential in the future. I was just kind of getting off on a tangent here. All contracts have addresses. In order to interact with the code, you need to have the address. When you send ETH to that address, it triggers the code, and the nodes on the network basically record the output. Ethereum was created by Vitalik Buterin in 2013. It was basically launched in 2015 with an initial supply of 72 million Ether. Now 50 of these were done in an ICO, and I believe currently we're at like 116 million Ether in existence, and that continues to rise. In order to understand Ethereum, you have to kind of know one of the faults that happened in the beginning. Because Ethereum had a split early on, and that's where we get Ethereum and Ethereum Classic. Where we get this split was a hard fork that was the result of a hack on the DAO. And basically the article just talks about this real quick, but I wanted to briefly cover it because it is important to know this kind of little history of ETH. DAOs are decentralized autonomous organizations. They're essentially companies that are operated by code instead of people. One of the very first and most ambitious attempts at this was called the DAO, and it would have been made up of a bunch of smart contracts running on Ethereum. The problem was shortly after its launch, malicious actors exploited a vulnerability and drained almost a third of the DAO's funds. And the DAO's funds were kept in the form of DAO token, which was bought with Ethereum. And this hack basically stole a lot of Ethereum. And after some deliberation, the chain was hard forked. Now, the reason why the chain was basically forked and separated was because the fork effectively reversed the hack and gave back the stolen Ether. And the version that gave back the funds and reversed the hack is what we know as Ethereum today. The actual original OG Classic hacked version stayed the same, and it was called Ethereum Classic. So currently, mining is how Ether is created. I don't want to spend too much time touching on this topic because in the next year or so, mining is going away from Ethereum. It's no longer going to be a thing. But essentially, just to get some kind of background knowledge on it, in mining, there's a subset of nodes, basically miners, that dedicate computing power to solving cryptogenic puzzles. What they're actually doing when they're solving these cryptographic puzzles is they're hashing a set of transactions alongside with some other data. And basically what that does is it prints that next page in the blockchain and continues building the book of transactions. And that's where Ethereum Gas comes in. Basically, the problem with having such a large network and having such a large hash rate is what happens when tens of thousands of people are running sophisticated contracts. It would put too much strain on the resources, and the system would probably collapse as a result. Now, what Vitalik did when he introduced Ethereum is he proposed the concept of gas to mitigate this risk. And just like your car can't run without fuel, contracts can't be executed without gas. And contracts basically set the amount of gas that a user must pay for them to run. If there's not enough gas, the contract won't go through. So it essentially acts as a fee mechanism. Now, it's important to note that Ether and gas are not the same. The average price of gas fluctuates and is largely directed by the miners. You pay for gas in the form of ETH. So ETH is basically the utility token for the Ethereum network. Gas is essentially the measure of computational power. It basically ensures that the system can provide an appropriate fee to users depending on the amount of Ethereum's resources that they're going to use. Gas actually costs a fraction of an Ether. It's such a small number that we call it a GWEI, and it represents 1/1000th of an ether. The gas limit is put in place to serve people trying to execute contracts or make transactions. It's put there to ensure that when the gas is used up, the operation will stop and the contract will fail. But that way, miners can't basically just drive the price of gas up unexpectedly, and you won't be end up paying like significantly more than what you originally started to pay. Now, this whole gas concept can be kind of confusing. So basically, it can be summed up as gas price defines how quickly miners will take your transaction. It's basically the incentive for them to process your transaction or contract. The gas limit defines how much you're going to actually pay in gas. So gas price defines how important your contract is in the eyes of miners, and your gas limit is going to be the maximum amount of gas you actually spend. Ethereum tokens are one of the most unique things about Ethereum, and it's the ability for people to create on-chain assets that are basically fungible, and we call these ERC20 tokens, and there's hundreds and hundreds of them. You can find them on CoinMarketCap. There's popular ones like Chainlink, Graph, Uniswap. Pretty much all your top, I would say a majority of your top 50 coins are going to be ERC20 tokens. The token functionality basically allows people to experiment with applications and push the edge of finance technology. So what is ETH actually used for? I mean, we spent time talking about its history, about a hack in it, but why would I actually want to buy Ethereum? What's the point of Ethereum other than just to pay for gas for these decentralized applications? Well, Ethereum can be thought of as digital money. It can be thought of as a store of value, just like Bitcoin, but it can also be looked at as the lifeblood of decentralized financial applications, decentralized markets, exchanges, games, and much more things that we haven't even thought of right now. Ethereum transactions cannot be reversed. Once data is added to the blockchain, it's basically impossible to remove it. So once you make a transaction, it's set in stone. Just like Bitcoin. People think that Bitcoin is private or this like digital currency you can use to buy drugs off the Silk Road. No, everything's recorded on the ledger. Everything is like open public access for anyone to see. So one, you can't reverse it. You can't hide from it. There's some pretty unique functions that come from that when it comes to finance though. How do we actually make money from Ethereum? Well, you can do what I'm doing and hold it for the long term. I've also traded it against other altcoins, and this can be done by using those decentralized exchanges to trade for other ERC20 tokens. You can convert your Ethereum into a wide variety of coins, and we'll look at that at the end of the video using Uniswap. ETH is basically the main pillar for the DeFi movement. It can be used for lending, meaning you can use it as collateral for loans, and you can also use it for minting synthetic assets. And at some point, you'll be able to actually make money from staking ETH. In the last video, I went over Walt Finance. We talked a little bit about yield farming and staking. You'll be able to do a little bit of that with ETH coming here in the next year or so. Now you can store your ETH in two different ways, a custodial or a non-custodial solution. Custodial solutions just means you have it on an exchange, whether it be Coinbase, Binance, Bybit, Kraken. There's tons of different ways that you can buy Ethereum, and that's done through an exchange. You can store your coins on there, however, it's not recommended. The recommended way to store your coins is through a non-custodial solution, whether that be a hot wallet like MetaMask or Trust Wallet, which is basically a software that you can put on your computer or link with your internet browser. and it allows you to store and own possession of your coins through an easy to access electronic means. A cold storage wallet is something like a USB device or a hard drive that physically stores your ETH outside of the internet, and it's going to be the safest way of all to store your ETH. And this just goes over the hot and cold wallets again. The chapter 4 is all about ETH scalability, ETH 2.0, and the future of ETH. This is a pretty big one, so we will spend some time on this one. Scalability is basically the measure of a system's ability to grow. Scalability refers to how well a blockchain can grow to accommodate more users, and it's going to be an incredibly important thing for Ethereum in the next coming future. Now, ETH is trying to become Web 3.0, and this would bring about decentralized topology characterized by a lack of intermediaries, a focus on privacy, and a shift towards ownership of one's data. In order to do that, Ethereum needs to massively increase the number of transactions it can process. The problem with that is it will shoot gas prices through the roof, and users will have to outbid others in order to have their transaction processed. This makes operations too expensive for certain use cases. Anyone that was in the DeFi movement between February and April of 2021 knows this, when they try to buy their shit coins and the fees were literally almost the same cost as the transaction. I remember trying to buy Rocket coin, and the fees were like 60% of the transaction. And so yeah, just it needs to scale in order for this to be a profitable thing. Vitalik proposes a trilemma issue with this. Essentially, you can only pick 2 of the 3 following to improve on without sacrificing the other. The first being scalability, the second being security, and 3 being decentralization. So in order to have 2 of these fail, or 2 of these succeed, one of them is going to fail. And the problem is, which one do you give up? If you give up scalability, your platform is never going to grow. If you give up security, it's going to never take adoption because people are going to be afraid of it. And if you don't have decentralization, then you're basically not innovating. You're just doing a small upgrade on the old traditional system. So why bother? And this is kind of where ETH 2.0 comes in. It's kind of Vitalik's way and the Ethereum crew's means of addressing this trilemma. Now, to back it up a bit, the higher the requirements to operate a node, the fewer participants there will be, and the more centralized the network becomes. So the problem is increasing the number of transactions could threaten the integrity of the system because it's going to increase the burden of the nodes. Currently, proof of work, which is how Ethereum works currently, it's how it mines, it's how Bitcoin works. It's incredibly resource intensive, and we see that with this green energy talk issue that's going on right now with Bitcoin. In order to address this, a major set of upgrades have been proposed, and these are collectively known as Ethereum 2.0 or ETH 2.0. Now, real quick, I want to address a quick misconception. This isn't a new coin. It's not like you're going to be able to go out and buy Ethereum 2.0 coin or just regular Ethereum 1.0 coin. Think of it as a iOS or a system upgrade. You're basically just refreshing the network itself. If you own Ethereum token, that's going to transfer over. Your old ETH balance is going to be your new ETH balance. It's just changing how basically things are mined. And it does that using sharding. Basically, what sharding does is each of the nodes must update, which consumes bandwidth and memory. When sharding gets applied, the process of storing everything on every single node is no longer necessary. It basically divides the network into subsets of nodes called shards. Shards process their own transactions and contracts, but can also communicate back to the whole broad network. Now, this whole thing requires a lot of work and design, so it's still kind of a big what if. An alternative solution would be Ethereum Plasma, and this is what's known as an off-chain scalability solution. What it does is basically pushes transactions off the blockchain, and it uses secondary chains that are anchored to the Ethereum mainnet, and they just kind of keep communication to a minimum. The Plasma approach allows developers to outline the functioning of their child chains to create smart contracts on the main chain. They're then able to address or create applications with information or processes that would be too expensive to store or run on the main chain. Another idea is Ethereum rollups. Rollups are very similar to Plasma in the sense that they aim to scale Ethereum by moving transactions off of the main blockchain. Basically what it is a single contract on the main chain that holds all the funds on a secondary chain and keeps the cryptographic proof of the chain's current state. Only valid state transactions are committed to the mainnet contract, and it basically reduces the communication issue. There's two types of rollups. There's optimistic and ZK rollups. ZK rollups being the more popular of the two, and they basically allow you to submit transactions using cryptographic verification known as zero knowledge proof. More specifically, it's an approach called ZK snark. In a nutshell, they allow for different parties to prove to each other that they have a particular piece of information without revealing what the information is. Now with optimistic rollups, it sacrifices some scalability with a little bit more flexibility. It allows for smart contracts to run on secondary chains, but there's no cryptographic proof that the state transition submitted to the main chain is correct. To mitigate this issue, there's a slight delay that allows users to challenge or reject invalid blocks that are submitted. But basically what's going to happen is Ethereum is going to move to proof of stake. But essentially what this is all going to do is put Ethereum to a proof of stake network instead of proof of work, which is mining. Essentially in a proof of stake network, a node or a validator is chosen at random to validate a candidate's block. If it does so correctly, it receives all the block's transaction fees and, depending on the protocol, a block reward. And this is in comparison to just kind of brute force battling it out of computational power that is used in proof of work. Now, this results in it being less harmful for the environment and a lot cheaper because it's not going to be as resource intensive. Now, Ethereum is scheduled to transition from proof of work to proof of stake as part of ETH 2.0 through an upgrade known as Casper. Basically, Ethereum staking is how you become a miner, or what we now call nodes. In order to stake, you have to have 32 ETH, and you put it up for staking. What is Ethereum staking, and how can we make money by staking our ETH? As we said earlier, you're no longer going to be mining, you're going to be staking in order to get rewards on the ETH network. And this is basically how we go about getting those rewards. If you have 32 ETH, you can become a validator node, and you can expect to earn roughly about 6% a year back staking that ETH. The minimum withdrawal time is 18 hours, but you're most likely going to be staking that ETH for many months at a time because it's going to be a long hold. Remember, if you decide to stake ETH, you're partially responsible for maintaining network security. Think of yourself as kind of like a mod on the network. If your validator node goes offline for an extended period of time, you may lose a considerable portion of your deposit. And if your deposit drops below 16 ETH at any point, you'll be removed from the validator node set. It's also worth considering another risk factor of proof of stake is that it's never been implemented at this scale before, so we don't know exactly how the whole system's going to react to it. It's definitely going to be interesting to find out, and it's why I believe we are nowhere close to being too late to the party when it comes to ETH. It's seen explosive gains so far, and I think that when we go to the proof of stake network, we're just going to see massive potential. The main selling point to Ethereum, I know we've been talking about it, kind of running around the main point of this whole thing for a while now, but the main selling point of Ethereum is decentralized finance. And decentralized finance is really going to change the game, guys. It's a movement that aims to decentralize financial applications, give free access to anyone with an internet connection to finance and the global financial system. It's going to allow users to interact with smart contracts and each other through a peer-to-peer network of decentralized applications. Simply put, DeFi is going to create a new financial system that's free from limitations of the current one. DeFi can be used for a bunch of things. First off, it's got open access, so a bunch of people can use it. If you've got an internet or a computer or a phone, you can get onto DeFi. DeFi offers stable coins. Now, these are essentially tokens on a blockchain that are pegged to real world assets, such as fiat currency. An example of this would be USDC, which is an ERC20 token that matches the dollar. DAI and USDT are other examples of this as well. And Binance has their own, BUSD, that they promote in their article. Another popular type of application for DeFi is lending. You're going to be able to lend your funds to others and collect interest payments in return. A great example of this is the video we did yesterday that talks about Walt Finance. And this video went over yield farming and staking. I actually showed you guys that I was able to earn 150% interest a year through staking WEX Poly token. This is an example of where DeFi is just killing traditional finance. You would never be able to have a high yield savings account anywhere close to above 1%, let alone 150-200% a year. And finally, DeFi offers applications. These are peer-to-peer decentralized markets where users can exchange unique crypto collectibles and other digital items. They can create synthetic assets, buy NFTs, derivatibles, get into synthetic stock markets. Just the possibilities are endless. Now, all this is done through decentralized exchanges. These are venues that allow trades to occur between users' wallets. Essentially, they allow you to trade directly from your crypto wallet, eliminating the possibility of exchange hacks and other risk. The most popular ones are going to be UniSwap, Kyber Network, and IDEX. We're going to take a look at UniSwap coming up here shortly. That's it as far as it goes for the Binance Academy side of the video. What I want to do now is switch over to CoinMarketCap and just give some updated coin metrics and tokenomics behind Ethereum. As of July 2nd, 2021, we are currently trading at just over $2,100. This is about half of its all-time high. We have a market cap of $245 trillion with a volume of 32 trillion being traded today. And currently, we have a circulating supply of 16.5 million ETH. You can see here's just a short little price chart here showing how we've been trading the past year. I think we've got a lot more explosive growth here to come in the future, and we are currently trading at a nice little sales price to our all-time high. ETH has a current market dominance of 17.77% of the total market, and it's currently ranking number 2 right now. And its all-time high was $4,300 set on May 12th of 2021. To point this out right here, the all-time return on investment for Ethereum is sitting at 74,250%. This thing has gone crazy, and like I said, I think it's got a lot of room to go. I mean, keep in mind, guys, we haven't even switched over to ETH 2.0 yet, and traditional finance still hasn't even really got a hold of Dapps and the whole portfolio of what decentralized applications offers. With that being said, let's head over to the Ethereum Organization's website and check out a list of decentralized applications. So over here on ethereum.org, we can see the Ethereum powered tools and services. This is going to be a list of all the dApps that are currently out right now. We can scroll down here and we've got a couple categories that we can search by. We have finance, which is one that I'm most excited about, arts and collectibles, gaming, and technology, and we're going to briefly look at each. As far as decentralized finance goes, these are applications that focus on building out financial services using cryptocurrencies. They offer services like borrowing, lending, earning interest and private payments with no personal data required. Some top lending and borrowing services are going to be Aave, Compound, Oasis. You've got Uniswap, Matcha, and 1inch as popular token swaps. For trading and prediction markets, these are going to be your synthetics. We have Polymarket and Augur. Down here for payments, Tornado Cash and Stabler. For crowdfunding, Gitcoin grants. We even have some insurance needs, Nexus Mutual and Etherisk. Scrolling back up to the top, we'll go to arts and collectibles. Take a look at that. Different arts and fashion and digital collectibles. This is going to be your NFTs over on OpenSea, Rarible, CryptoPunks. Looks like we got some music on the Ethereum network. And of course, you can always suggest or add your own Dapps to help grow the Ethereum network if you're tech savvy. Going over to gaming, this is one that's been seeing a lot of increase lately. Decentraland, that has a lot of really cool potential. I've got a family member that plays around in Decentraland a lot. He talks about the crypto casinos and just kind of the cool things that are coming to Decentraland. Personally, I haven't done it yet, but maybe I'll have him show me how to do it, and we'll throw a video up on here. Going up to technology, here's where we get some utilities. We have marketplaces where you can actually buy stuff, dev tools, and we have our Brave browser, which is the browser that I recommend. You can actually earn BAT token just for browsing. So kind of a cool little feature there, earn crypto just for doing your normal day-to-day stuff. But essentially, those are some of the Dapps that are currently out to give you an idea of what is available for you. I highly recommend checking out the Ethereum.org website and just learning more about Ethereum. But finally, to close this video out, I want to show you guys one of the most popular features of Ethereum, and that's going to be the token swap. This is a way that you can make crazy gains in cryptocurrency, taking Ethereum, which is more of a steadier growing asset at this point, and trading it for a super low cap or newer coin that's set to grow in value, and basically trading that against it. So for instance, if I wanted to convert my Ethereum over to the Graph, which is a project that I'm super bullish on in the near term future, basically think of the Graph as Google for smart contracts. But you could essentially connect your wallet up here, and you could swap 1 ETH and turn it into 3,757 Graph. And that would put the Graph in your wallet, and you can do some arbitrage trading or swing trading with this method. If Graph were to rise in price, you could then go ahead and switch Graph over here and switch it back to ETH and profit out. Or you could profit it in stable coins, which, remember, stable coins are a huge thing in DeFi. So you could put it into USDT, which I'm not a huge fan of. I don't promote USDT because I believe they are a Ponzi scheme. So I would convert it to DAI. I'm sure that's going to ruffle some feathers, that little Ponzi scheme comment, but I'm sure I'll have a video out on that in the future. DAI is a stable coin that I personally own a lot of and I personally use, but that's just an example of, you could buy some Ethereum on an exchange like Coinbase, transfer that Ethereum over to your MetaMask or Trust wallet, use Uniswap on the Ethereum marketplace, on the Ethereum platform, and you could swap your ETH token to GRT, and when GRT appreciates in value, you could swap it out for a stable coin and just kind of rinse and repeat. So DeFi's got a lot of really cool things coming up. Here's their pools. This is for staking and liquidity pools on Uniswap, which is another more advanced lending way of making passive income with DeFi that we'll go over in a future video. But as far as Ethereum goes, that's pretty much everything about it. We've covered what Ethereum is, why it has so much potential with being the platform that allows Dapps, or essentially decentralized finance, to really occur. Without Ethereum, DeFi would have a very hard time coming to market and adoption. We see platforms like Binance Smart Chain kind of coming out there to push as competition to ETH, as well as Cardano, but Ethereum was the main original project that conceptualized the idea of hosting smart contracts or people being able to write their own DApp codes. That all came from Ethereum, and we have to give props where props due. Vitalik had a crazy idea and ran with it, and I think the world is a better place because of it. Personally, ETH is my largest hold. I think ETH has a lot of room to run in the next 5 to 10 years. It's really hard to put price predictions out there when we're talking 5 to 10 years in cryptoverse, because so much happens so quick in crypto and we're writing history every single day. So I won't give a long-term prediction. All I will say is I'm excited to refer back to this video in the next 5 or 6 years and see kind of how the landscape has changed. But with that being said, thank you for watching. If you enjoyed today's video, please give a thumbs up. If you have any questions, feel free to put them down in the comments. I'll get to them as quick as I can. In the description, I'll have links to the Binance Academy as well as the Ethereum.org website. There's also links down there to different promos or sign-up accounts. Places like Coinbase, where if you're interested in buying Ethereum, you can get some Ethereum. Everything that I get from those links basically gets put back into the channel, so I appreciate if you guys do use those. With that being said, my name is Sugar. Always do your own investment research before jumping into a trade, and have a good one, guys.